Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Gene Trowbridge and Jonathan Ney, founding partners of the top syndication firm, Trowbridge Law Group, LLP, have a legal team with over 50 years of combined experience in real estate syndication and the practice of real estate securities law. Over this time, Gene and his partners in several past firms and currently have helped clients raise close to $5 billion in offerings by empowering entrepreneurs to raise capital legally. To learn more about Trowbridge Law Group, LLP, visit their website at trowbridgelawgroup.com or follow them on Facebook, Instagram, or Twitter. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Luc D'Abreau. Thanks for being on the show, Luc.
Yeah, definitely. Thanks for having me, Whitney. Looking forward to getting into it.
Luc's educational and professional experience is in the architecture, engineering, and construction industry, and he has been involved with projects valued at over $750 million over the last 9 years. He's a limited partner in 445 units across 2 assets in Texas, totaling $36.8 million. It is part of the National Black MBA Association and African American Real Estate Professionals, and holds a master's in engineering from UCLA and soon an MBA from the University of Illinois. His goal is in real estate is to create generational wealth, leave a legacy, and provide a better life for his family. And we're going to hear today just some of the things he's done to get that started, especially investing as an LP in a few deals, things he's looked for. We want to learn from his experience and how he chose, whether it's the GP or the market, and different ways that he has been successful that in his path moving forward. So Luc, welcome again. Grateful for your time and being willing to share your experience and expertise with us. Give us a little more about your background and just getting into the syndication business and why, why invest in syndications and why was that right for you all?
Yeah. So, when I had finished grad school, this was back in 2012, I ended up reading the famous purple yellow book that everybody references, of Rich Dad Poor Dad. And so I had kind of had things on my radar in that way already, just being able to do more than simply work in order to have income. And I saw things like that growing up as well. I had some exposure to that, but I didn't really have any sort of framework or plan to move forward with that. And so, reading that kind of definitely shifted my mentality a bit, Whitney. And then I continued to just get education and learn and read books. And then podcasts back then weren't nearly as big as they are now, but, maybe 5 years ago podcasts were. And so that kind of helped along the way. And I had an opportunity to invest in a couple of those deals out in Texas, like you mentioned. And I knew it was the right time and wanted to move forward with it because, I'd been preparing for it. I'd been waiting for it for so long at that point, it felt like. So I jumped into those, and the rest is history. And I'm still involved in both of those deals. They haven't gone full cycle yet, but those are doing well, and looking forward to investing in more.
Nice. Well, let's jump in there a little bit. And I'd like to even back up and say, how did you know you were ready? Why was it syndication? I know you've been educating yourself, but you could have invested with a single family operator, or you could have invested in land or hospitality, or, there's so many other avenues, right? Or in the stock market even. Why was it, syndication? And I assume it was it was multifamily because we share the units. Yeah. And so, why that specifically?
Yeah, so I never ended up doing a 401k. I was 22 when I started out working. I didn't do the 401k because I didn't understand it. I didn't want to put my money into something that I didn't get. And it didn't seem like anybody else at work really understood it. It seemed like they were just doing it because that's what you were, quote unquote, supposed to do. Now I understand what the heck's going on with those, but, I'm a cash flow person, and I need to understand what's going on and capital preservation. And of the different asset classes, whether it's in real estate or in the public equities that you just mentioned, real estate, specifically multifamily real estate, is the one that's able to provide capital preservation. It's something I understand, and it has that cash flow. Everything else, it can be a little more volatile. It can be a little more tricky, something like single family, obviously. land, it doesn't cash flow. So, that kind of met my criteria that I was looking for.
Nice. So, tell us a little about you were educating yourself. So many people that are listening right now are doing the same thing you were doing, quite a few years ago now, and they're learning about the syndication business. And as they're looking to invest and grow their wealth, they're also trying to figure out, well, how do I trust this general partner? How do I trust this operator? There's so many of us have different qualities, right? That, we bring to the business. But how, and I just got off the phone with numerous investors, that ask different questions, right? Many are the same, but many are different, and they want to know how they can trust me, right? And so that's, we just want to show everybody that we can be trusted, right? But how did you go through that process, to say, okay, this is the operator I want to put my hard-earned money with?
Yeah. So the two offerings that I invested in were both 506B. And so there was a connection that both of us had. My former roommate had a connection to one of the lead sponsors on the deal. And so that was, that helped provide a bit of a sense of trust, of course. But meeting with him and talking to him, so there's two partners, and meeting with him and talking with him, that ended up helping a bunch to provide some more, I guess, a greater level of comfort, right? So it's like, I want to be able to feel like, okay, does this person know what they're talking about, number one, but do they seem like they're a good person, could actually have a conversation with them? If we end up working or partnering together in some way down the road, is that somebody who I'd want to actually partner with? Like, can I talk to them, period? Like, have a basic conversation. So that was honestly big for me. And then there's just a lot of due diligence. I mean, I checked out both of the sponsors. I checked out the property management company. Like, my fiance and I, we secret shopped both of the deals. We looked at the areas. So both of the deals are in San Antonio, and we weren't as familiar with them because we're native Californians. And so we went out there, we secret shopped them. We talked to the property manager and the leasing agents who were there. I wanted to see what kind of cars were in the driveway, all of that sort of thing. Like, at the very least, would I want to live here? Would I be comfortable living here? Do I feel safe? Right. And then the last piece was doing my own underwriting on them too. So I took the pro forma and ended up doing sensitivity analyses and just ended up checking, like, okay, so how bad do things have to get to where this deal isn't going to work anymore? And because, like I said before, I'm big on capital preservation. It's, especially when you're working. I mean, I'm sure you're aware of this. It's like, it takes so much time and energy to end up actually collecting the money and keeping it, and you get taxed on it. Like, I don't want to lose it. So, because there's a bunch of time and energy that got put into it. So I wanted to make sure the capital was going to be preserved. And so with my own underwriting, that gave me a greater level of comfort as well. Yeah. And I mean, those, that group, they're Wildhorn Capital. If anybody's heard of them, they're, I guess one of the partners is in LA. The other one is in Austin, Reed and Andrew. And I mean, those were the two first deals. And I think now they're on to their eighth, I want to say, something like that. So they definitely continue to grow along the way over the past several years.
Yeah, I know both those guys pretty well. Yeah,
Oh,
great
nice.
great guys, and they've had some success. Yeah, I think a lot of both of them. So I wanted to jump into a few things you said there. You talked about, I mean, you went to great lengths, to be able to vet the general partnership and to look at the deals specifically. There's very few times we offer it to all of our investors also, like, come out to the property. We'd love to host you, come out and walk the property with us. We'd love for you to put your hand on the building. Know it's real, but most can't do that. Right. And they're too busy, right? Or they're busy, operating their professional business or whatever they're doing, and it's hard to get a flight out within a week or two and see the property in time before they have to make that decision. And that's why they're investing passively in the first place, right? Because they don't want to be the operator, don't have time to do that. And that's why this business model works for them. But you did. And I think it's incredible. Tell me about, how did you prepare for even a property management conversation? Because how did you vet a property manager? And what was your thoughts behind that and just being prepared for that meeting, when you're really just learning about the syndication business?
Yeah. So, I guess it was two things. There was a lot of digging I ended up doing online about the property management company. So I just did my own sort of, research, and that ended up helping, I would say, just to figure out, okay, well, how much how long have they been in this business? Is this, do they do well with value add properties? Like those were the sorts of things that I was interested in. And that was just my own research.
So you took you knew the business model that was going to happen, that they were planning for the property you were going to invest in, and said, okay, has this management company done that before?
Right. Is that something that's on their website? As they might have all these units, but are they, do they do more lease up, or have they done value add and turns, or like these turnaround properties, so to speak? That was something that I wanted to get a sense for, because they're completely different competencies, and then the other part too was just literally, like I said, we secret shopped them. So we went in, we said, hey, we're looking at moving to the area. We just want to look at a couple, a 1-bedroom, a 2-bedroom. And that ended up helping a bunch. I just wanted to see, because I've been in sales for the past 6 years. Right. And so, customer interactions are very, very important. I'm like, okay, so how do they greet us? Are they professional? Like, do they have their stuff together? And that was something that was important. And I wanted to see, okay, what's the feel like? What's the qualitative feel? Are they asking for the sale at the end of it? Are they trying to get us to apply? All of that sort of stuff.
Nice. No, it's incredible. I mean, you secret shopped. I've secret shopped some properties before that we were looking at purchasing, so that's interesting, as an investor, taking the time. I mean, it wasn't like it was in your backyard either. You all had to upfront some expense there, to be able to go and do that and probably stay overnight, a night or two.
Yep.
And like you mentioned, even seeing the types of cars that were at the property and determining whether you would be comfortable living there. But the next thing I wanted to ask you though was, you mentioned like underwriting the property and doing sensitivity checks and things like that. Well, that's kind of a more detailed thing too. There's a whole skill set around underwriting and understanding, the sensitivities of a specific property or business plan. And how did you educate yourself enough to feel comfortable, even underwriting a property like that?
So I looked at previous OMs before, and I had an understanding of the basics of an income statement at that time and how a DCF cash flow model works. So that ended up helping. But then the other part, what I ended up doing was I just took what they had as their pro forma. And so, I mean, to preface this, like I have a master's degree in engineering. So it's like, okay, well, I can work with a spreadsheet and I can understand some basics, right? I mean,
so you got a leg up already. I mean, that's incredible. Yeah.
Yeah. It was just like comfortable, being comfortable with like numbers at the very basics, but then being able to, work the basics of a spreadsheet, like nothing too crazy, of course, but just being able to work with that. And so I just ended up looking at a combination of the rent dropping and the occupancy dropping. Where does the deal not work anymore, whether it's year 1, year 2, year 3? I mean, if it's year 5 at that point, it probably doesn't matter. So I kind of looked at those several years. And that's, I ended up diving in that way to do my sensitivity analysis. Like I said, if the money does what it's supposed to do and all the targets are reached, that's great. But man, I do not want to lose money. Like that's, it's like capital preservation. People invest a lot of the reason why people invest in multifamily and in real estate generally is because there is capital preservation. It is that hard asset, right? It's a very risk averse industry, generally speaking, compared to so many others. And so, that's what attracted me to it. And so I wanted to make sure that these properties and these investments ended up fitting that criteria for me.
Nice. I know that you had a connection through a friend to this, to the GP, so there was already some trust there built in, and that's always helpful, right? To have somebody refer you. We love referrals, right? Because that speaks volumes, before ever even having a call with someone. So you figured out, okay, I feel like we can trust these guys. What about the market itself? Was there anything specific that said, okay, I love this, this market seems to be doing really well. It's a place to put that capital so we don't lose it.
Yeah, I think big thing was looking at the state. I mean, the state of Texas is much more business. So I'm very familiar with California. They're polar opposites, as we all know. So that was one thing, was the state. And then looking down at the actual MSA. San Antonio was and still is more affordable than like the next closest MSA, which is Austin. And so the idea is that, and it's continuing to happen, there's so many people who are getting priced out of Austin and they're needing to move to San Antonio, and San Antonio has a more diversified workforce than Austin does as well. So it was those things, and then also population growth. Jobs were continuing to go there. So it was a combination of those things that I was looking at, and that ended up making it more advantageous. I mean, the other part too is, I mean, broadly speaking, is with it being business friendly, the laws for landlords and what you're able to do there versus what you're able to do here in California. Downside is the taxes, but you just know that going in and just prepare for it as it comes up annually, basically.
Yeah. I know, now you are, you've got some experience investing. Obviously you're good with numbers, you have lots of experience there. But now you are transitioning, right? You want to go more to the general partnership side. Can you talk us through this process a little bit, what your plan is? There's numerous people listening who are, doing the same thing, or maybe they've even invested passively in a few deals just to learn the business so they can also become a general partner. What's your plan or thought process behind that as well?
Yeah, so it's really, really the main reason is to be able to have the lifestyle that my fiance. So we're getting, Daisy and I, my fiance, I keep mentioning her, we're getting married in 2 weeks, right? And we're planning on having children.
Congratulations.
At some point soon. Thank you. Appreciate it, Whitney. And so we're planning on having children. And we want to be able to have a certain lifestyle with that. And if you're on the GP side, you're able to end up growing your wealth more quickly, from what I've seen and looking at numbers, than you would if you were on the LP side. And of course, you have to want to actually be active, but both of us do, and that's something that's something that we want to end up moving forward with. And so the process to kind of do that, it really started, I guess, back in March, April. I mean, when everything kind of shut down, and we looked at it as an opportunity to really move forward with it. We started attending so many meetups, different types of RIAs. I mean, the main one is MFM, and is also Phoebe here in Southern California as well. MFM is multifamily masters, and Phoebe is for investors by investors. And so we started attending those meetups, learning more, getting connected with more people within the industry, have continued to do so. We decided to start the podcast. I mean, one way of that is as a marketing tool, of course, but we wanted to be able to address a part of the market that just hadn't been addressed. It seemed like anybody was really speaking to them. And that's why we end up focusing specifically on millennials and how real estate can end up helping them. So, right now we're continuing to build out the team, whether it's with capital raisers, lenders, brokers, attorneys, KPs, so it's a process, of course. Like, there's a lot of moving parts, but it's been fun so far. So I'm trying to think of advice, because I think that's kind of where your question was going.
Maybe you can speak to, imagine you have a good JOB right now, and you've probably worked hard to gain the degree you have, and lots of time spent there, right? And that's a lot to leave behind, and probably family people were saying, Luke, what are you doing? You spent all this time over here, you're crazy.
Yeah. Yeah. It's interesting. I guess I look at it more like not what I'm leaving behind, but what I'm moving towards, right? And it's more of like the opportunity cost of not doing it is much more of a motivator than I put in all this time and there's a sunk cost into doing the work that I've been doing. It's like life's nobody knows what they're doing. People just kind of figure it out along the way. It's not kind of seems like, maybe some people know exactly what they want to do when they're like, when they're 15, like you're Isaac Newton or Elon Musk or something, right? But I've just kind of figured things out along the way, and this is something I've been sold on for quite some time now. And so moving forward with that, it just ends up making the most sense. And I think I've been talking to people about it for so long that it doesn't necessarily come as a surprise that, I plan to transition over. Daisy plans to transition over as well. Both of us still work full time, but we're LPs and forming our team and working on the syndication route in parallel right now. So that's just the path.
Up to this point, what's been the hardest part of this syndication journey or process for you?
Oh, that's a good question, man. It's like knowing what you don't know. Like, you don't know what you don't know. That's a big part of it. I mean, there's a lot of, like I said, there's a lot of moving parts. It is a simple business. You buy a property, people rent it out, you get the money, but there's more to it than that, of course. So I'd say not knowing those things, and that's why we're having more talks with KPs as we're deciding, okay, like we're really diving into this to make sure that we have all those ducks in a row, so to speak.
How do you prepare for a downturn, or you can say that from the LP side, looking at a GP, or even you moving forward on the active side as well?
I'd say one thing is I'll start macro and go micro. I mean, one thing is the market. I mean, pick the right state, pick the right market. Look at where trends have been going for the past 5 to 10 years. Look at what's been happening the past 6 to 9 months. Look at where things will continue to likely end up going. I mean, it doesn't take a rocket scientist to look at, how legislation and cost of living drives population growth or population movement, So I'd say that's one thing. And then the other thing is a sensitivity analysis. I ended up underwriting to see how far does occupancy have to drop and how far does revenue have to drop in year 1, 2, or 3 for it to not cash flow anymore. Like, what's that number? And I'm like, okay, has occupancy ever dipped that much? So occupancy has to drop 80 to 80%, and revenue, top line revenue, has to drop 10%. Has that happened? Has it happened historically? How are things before? Then if it hasn't, excuse me, and I feel like it's unlikely to end up happening, it just hasn't happened historically, then that gives me a level of comfort, knowing that the downturn, is prepared for.
Nice. What about, what do you predict, over the next 6 to 12 months, as investors are listening, they're contemplating, okay, is this the time to invest? Or even as a buyer, is this the time to buy, or should we wait?
I'm of the mind that the best time to do something is now. Generally speaking, right? I mean, it's just a matter of taking action, because you're going to be further ahead in 6 months than you would have been otherwise. So that's where my head goes. Inherently, there's going to be markets and deals and sponsors and things that, those things that end up working, like, they're out there. You can still see deals coming through and all of that. So that's kind of the advice that I would give. I mean, in terms of what I actually think is going to happen, I mean, of course, part of it's dependent on who gets elected in early November, I would say, to an extent. But generally speaking, over the long term, it's like cap rates are going to continue to compress. I mean, probably the 10-year treasury is going to continue to be flat. Interest rates probably will be. And I'm thinking, several years out. And economic growth may not end up being where the Fed's trying to get it to. So that's really where my head goes. I mean, I think what's going to happen is that people who sit on the sidelines are going to be kicking themselves in 5 years, wishing that they would have gotten involved. That's where my head goes.
What would you have done different on, say, that first or second investment? Now that you know what you know.
Man, I probably would have been more vocal and asking more questions. I kind of felt like I wasn't able. I had this idea that, oh, well, they're the lead sponsor, they're the managing partner of this deal, of this firm, and I shouldn't ask questions to them, or I shouldn't kind of, I'll ask a few and then just kind of leave it there and just try to, connect the dots as best I can. But I probably would have asked more questions, because I would have known more now at this point, and would have been better prepared for what Daisy and I are doing.
What's a way you've recently improved your business that we could apply to our business?
Calendly's huge. I mean, that's like coordinating, because we have a podcast also. And so coordinating, these times is just like crazy, so many times. And Calendly's a big, I don't know how much it even costs. It's like $10 or something. I mean, that's huge.
What's your best source for meeting new investors?
Honestly, it's really been the podcast. I mean, people reach out to us on Instagram, or they reach out to us via email, and we just have conversations with them. We just let them know what we know, and if they have questions, then they continue to ask questions. So the podcast for us has been huge to just meet more people who are interested.
What's the number one thing that's contributed to your success?
I would say my parents. I had a pretty rock solid foundation. I would say. I think being born to parents who have degrees, and even though one of them isn't from here, and another one isn't. When I say not from here, one of them's not. One of them's an immigrant, and the other one, her parents were both immigrants. But man, it's I had just a really solid foundation. And they both have degrees. I have degrees. Like, I was born in America. They just like set up this like very basic level for me to be able to succeed. So I'd say it's that, Whitney.
Wow. How do you like to give back, Luke?
Honestly, it's like talking to people, especially people who are younger than me, and just letting them know that these things are available. You don't have to do what, life is what you make it. You can live the life that you want to live. There's no rules to this thing, right? People make up new rules all the time. Like I said, Elon Musk is like, oh, I'm going to dig tunnels. I'm going to go to Mars and whatever, So, so for me, it's like talking to younger people about these opportunities that are available, and kind of, seizing the day, carpe diem.
Nice. Luke, it's been great to get to know you a little bit and just hear your story, and from, getting the degree and having a great job to investing passively, and the due diligence that you did there, I thought was incredible compared to most, investors when they first start investing in these deals. But just how, the length that you went to travel there and secret shop and talk to the, property management company, and just even knowing to look at the cars that were there, and, sensitivity checks, all those things, and to the market, to now becoming a general partner in your plan to get there. Just grateful for your time and sharing that with the listeners and myself. How can they get in touch with you and learn more about you?
Yeah, it's been great talking, Whitney. Thanks for having me on. The best way to get in contact is you can reach us at Make It Rain Podcast on Instagram. We're at makeitrainpodcast.com. And our podcast is everywhere. It's Make It Rain, Multifamily Real Estate Investing for Millennials. And you can also email me too if you'd like. My email is jldabreau@gmail.com, and you can reach out to me there. So I'm open to any questions that anybody has. If I don't know something, I'll say I don't know, and then refer you to a contact who does. So more than happy to continue the conversation with any of your listeners, Whitney.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.